Welcome everyone to Banana Bread Trades. Today we're going to talk a little bit about fading trend days. Now this is somewhat fortunate. We had a massive 3% up day followed by Amazon earnings after close, pushing us another almost 100 points higher in like 1 minute. So this feels like a great example to talk about how I identify trend days and what I use to kind of tell myself, hey, we're coming up to a level, but I shouldn't short it because this day is obviously trending. So that's what we're going to talk about a little bit in this video and hopefully give you guys a little bit more structure and I guess comfort in knowing when a short is okay or when a long is okay. Let's say we're having a big downtrend day. And when to kind of think, okay, market's obviously trending and we're confirmed we're trending, I'm going to go ahead and stay out and maybe just plan for taking a long or short with the trend here later. So when identifying a trend day or a range day or however my day is going to plan out, there are three main things that I look at. The first one being initial balance. And if you've seen any of my previous videos, you know that I love initial balance. The next thing being our longer time frame levels. Now this can be on your hourly, 4-hour chart, daily chart, weekly chart, some sort of long time frame level to give you an idea of the macro perspective of the market, right? So hundreds of points apart, like lots of big distance apart to kind of gauge these big swings in the market and obvious levels. Right, those are longer time frame levels that we're looking at. And then the third thing I'll use to identify a trend day or a range day will be our daily volume profile. Now this can be for the Globex and regular trading hour session or just the regular trading hour session. We'll talk about both and how I use it to identify, hey, we're going to reverse here, or hey, we're going to continuing up. So we're going to go over all three of those things. And the first thing we're going to talk about is my bread and butter, initial balance. So let's go ahead and make this chart big. And this is our initial balance chart showing our regular trading hour session. We got a little bit of Globex going on right here. But right here is market open at 8:30. I'm in Kansas, so 8:30 is my market open time. Don't yell at me. That's just how it is. Right? So initial balance, it's a range until it's proven not a range. And that's how I always play that first hour opening session, is that it's going to be a range. Now I'm usually patient and I wait for that unless we are at one of those longer time frame levels that we were talking about earlier. Now, as we've talked about in previous videos, once we break above initial balance, I am expecting a trend day to take place. And when that is confirmed is when initial balance breaks above and then is supported. Same thing with on the red side too. If we break below, catch resistance at initial balance low, I then expect us to trend down the rest of the day. However, there is one stipulation. There's one last level of resistance / confirmation. This trend day is taking place and is in full drive. And that is the 50% initial balance extension. That is my last kind of, hey, we need to get by this level before we can continuing up type of level. And what the initial balance extension is it's pretty simple. It's just the distance of initial balance, and then the 50% initial balance extension would be 1/2 the distance of initial balance above initial balance high or low. And then the 100% would be a full initial balance move to the upside or downside. Then you have 150, 200. After 100% initial balance extension, you are so incredibly in a range day that the next levels don't really matter. At that point, you're only playing your longer time frame levels. So I don't ever draw those out. The main one that is important to me is the 50% initial balance extension. And why is that? Well, there's a high percentage of the time, and I mean it's a high percentage above the 80% range, that if you break in support the 50% initial balance extension, you are going to the 100% or past, and you are not returning back to initial balance that day. Now, the only problem is the 50% initial balance extension, especially as we've seen the last 2 months, is also a potential reversal point. And let's say you do reverse at the 50% initial balance extension and you break back into initial balance, there is another high statistic that you will go to the negative 50% initial balance extension, right? Especially in this rangy kangaroo market we've had the last few months, that has become more common than we saw in 2022. So you have to be cautious there. Now, what I use to kind of keep myself safe on taking that long at initial balance high or initial balance low is what we see right here was a perfect example. We break initial balance high, we come back, we retest initial balance high, we support it, it kind of breaks a little bit. It's in Q, you got to give it a few points of buffer, right? It's always going to be a little wicky. But we still supported initial balance high, found buyers, and moved to the 50% initial balance extension, right? Once we've done that one major support on initial balance high, that play is off the table for the rest of the day. We're no longer taking any more longs at initial balance high. So if we went to the 50% initial balance extension, like we did, and we had come back and retested initial balance high for a second time, I do not take that trade because we've already supported it once. The second test of initial balance high, especially after testing the 50%, is a pretty low percentage play. And I would look for that to break back into initial balance. And once we break in back into initial balance, the day's pretty much over. We're either going to sell off hard back to the negative 50, or we're just going to chop around, be rangy, gross, and untradeable action. However, on this day, we had beautiful confirmation. We broke the 50% initial balance extension, supported, and then we moved up. And we moved up to the 100%. You can see there was a little bit of support, or I mean resistance, at the 100% initial balance extension. And that's completely fine. But after that 50% move there, I mean, we're guaranteed in a trend at that point in time. We're not going to have any big sell-off unless there's some sort of cataclysmic event or news that comes out. But yeah, after that 50% initial balance extension holds, my short button is deleted. Same thing with the red side. If we break initial balance extension, the 50% initial balance extension to the downside as well, long button is deleted. Hey, we're done stabbing longs for the day unless we just so happen to maybe catch some long-term level. But even still, after the 50% initial balance extension, I stop looking at my longer time frame levels for these big reversals, because the day has decided that we're going to move up to our next area of interest. We're going to find a new area of interest. And that's where we have to use the next thing I'm going to talk about, which is those longer time frame zones and volume profile. So now we've moved on to our longer time frame chart. Now, what is on this chart and how do I choose these levels? Well, these levels are areas of major support and resistance, supply and demand, as some people call it. Old POCs, daily POCs, I will mark those out if they have remained untested. Some of these I need to delete from today. I'll also mark out singles from TPO charts. And then I will also mark out high and low volume nodes on the volume profile, right? Any big areas of interest. Like I marked out our contract POC. Right, I have this this volume profile goes back over the entire month, and I have this POC marked because this has been a major area of interest on the entire, like this entire range, right? There's been so much consolidation here. It may not be the area where I take a trade. As we saw this morning, I was on stream. I did not take the short that was in this zone because I expected some chop, and that's kind of what we got. But I will look to take trades to this zone. And then same thing with all these other zones. They might be support resistance zones. And of these larger volume nodes or low volume nodes, right? This big red zone here, that's the end of volume for this contract, right? This is our doom level here. This is uncharted territory, literally. So that's what I'm kind of marking out on my longer time frame zones. And in that first 30 minutes, that's where I'm kind of the only areas I'm looking at to take trades, right? I'm not getting all antsy because market's chopping up and down or, you know, some indicators doing something. I'm simply just looking to see, hey, are we moving into one of my longer time frame zones here? And if we do move into one of my longer time frame zones, well, then how do I want to position myself? What's delta look like? What's our overall macro structure look like? Are we breaking out of any serious trends? Where are we in respect to our monthly volume profile, right? Like this morning, right off open, we moved right to this POC. Like this is where we were chilling. I was like, I don't want to take a short or a long in here because this is where a majority of the trades are going to be taking place. I would rather trade to this, below this volume profile or this POC. I'm going to be taking longs, expecting us to move back to it. And when we're above it, I'm going to be taking shorts, expecting us to move back to it. I'm playing this range that we've kind of formed here on this massive volume profile. Look how balanced it is, right? I'm just playing one extreme to the other while also taking scalps at these levels, right? I'm just playing the bounces of these levels. So that's where I'm being patient. Now, when we have our initial balance on the chart from the one that we saw earlier, when we break that 50% initial balance extension, I stop focusing on taking opposite-sided trades at my major levels of interest, right? So say we broke the 50% initial balance, which we did, which was right about here. We're moving up to this level. Well, we have already ripped. So far, we're past the 100% initial balance extension at this point. We are clearly in a trend. We've moved an entire initial balance worth of distance higher. I am not going to plan on the market reversing, right? The entire day, the entire stock market is very green. It's very unlikely that we just flip 180 once we're above that 50% initial balance extension. So I'm not going to take the short at my level anymore. I'm only going to be playing these levels to the reversal side if they are within the 50% barrier of that initial balance extension. And maybe we are above, and maybe we do see something to end up wanting to take the fade. Well, that was something that we see. That's going to be reliant on volume profile. That's the next thing that we look at to help identify our trend day as well. As you can see today, we had no major large volume nodes show up throughout the day. Our volume was very evenly distributed almost the entire day, right? No massive accumulation whatsoever. If I am going to fade one of my zones, right? If I'm going to fade a trend day in one of my zones, I want to see volume profile put a massive P shape right here, right? I want to see a massive accumulation of trades going on in my zone. That's showing me that, hey, there's a lot of profit taking going on. There's a lot of sellers stepping in. A lot of trades are going on right now. It looks like a decision's being made. Well, maybe I want to take the reversal and join in with all this profit taking going on with a scalp to the short side. That would be the only opportunity I would take to the short side. The rest of it, if I don't see that accumulation in volume profile, I'm going to assume that we're going to blow right through my level. And if I am going to take another trade, once we're past the 50% initial balance extension, it's only on pullbacks to my levels, right? I'm going to wait for market to go up. I might not get a pullback that day, and that's completely okay. We missed the trade for the day. You're going to miss a lot of trades in your trading career, and I mean thousands of trades. The only trades that matter are the trades that were high percentage that worked out, right? If you're taking a long up here in the middle of no man's land, after we've been ripping this whole time, you're FOMOing, you're buying the top. Unless you have clear reason to be doing that, like you can sell your grandma that trade, just don't take it. Just be patient, wait for the next day, and trust me, you'll have so many good opportunities. Just don't blow it on the things that aren't clear just because you're afraid the move's going to move without you. Have power over the market. Let it move without you, and just wait for your level. And that's how you can survive on days like these. That's how you can survive not fading trend days. That's how you can survive and then take trades when the market is clear. So let's go ahead and kind of recap what we all talked about in this video right here. I know it was kind of a long-winded one and I kind of rambled a little bit, but I hope this will help you out a little bit. So there's 3 major things that you want to look at when knowing how your day is going to set up and when it's became a trend day and how to avoid fading that day. Step 1, are we above initial balance high or initial balance low? If the answer is yes to either one of those, we want the market to continue in the direction above or below initial balance high and initial balance low. So if we break above initial balance high, right, we're looking for the market to turn trendy, right? It's broken above that initial balance. That means market's wanting to find buyers higher or find sellers higher, whatever terminology you want to use. They're trying to find trades higher, right? We want to see the market continue higher. Well, if they find that they want to support initial balance high and keep moving, at that point you're thinking, hey, trend day. That's what we're on. If we break above that 50% initial balance extension and we find support there too, you're like, okay, trend day is official, like it's officially a trend day, confirmed, no more shorts on the day. In that first little bit of the day, when finding that initial trade, looking at our longer time frame zones, that's what we're doing. And if we're going to fade a trend day, we're above that initial balance, that's also where we're looking. We're looking to enter and exit our trades on these longer time frame zones, especially on a trend day. You don't want to be looking at any tiny pullbacks or little wicks or anything. You're only looking at this big chart at that time. And then, like I said, if you do want to fade a trend day, you're going to want to look at your longer time frame chart, and then you're going to want to watch volume profile and see contracts being traded in your zone. See that P profile shape get formed and be like, okay, there's a lot of interest in this zone. I will take the fade. But other than that, once you see it break that 50%, or once you see it break above one of your longer time frame zones, just quit. Just quit and wait for the next setup. And that's how you can kind of survive in those types of market conditions. And they can come out of nowhere. Like I said, we've been in a range market for a long time. For, I don't know, 3 months now, we've been in a range market. These big 3% days, when they pop up out of nowhere, no one's ready for them, right? You're just playing the range like you have been over and over and over. And you have to kind of have things in place for yourself to know, and like, hey, it's not like the other times. And for me, that's initial balance, and then just, you know, watching my longer time frame levels and using a little bit of volume profile here and there. So I hope this video was really helpful. Again, I'm sorry this was super long-winded. Sometimes I go on a little bit of a rant, but like I said, I hope this helps you. And I hope you find a way to kind of keep yourself safe in ever-changing market conditions. So thank you all so much for watching this far in. And yeah, we'll see you on the next one.